Did you know that Australian households now owe a staggering 2.5 trillion in debt, more than the entire size of our economy? Or that 1 in 4 young Australians can't find full-time work, even with a degree? These aren't just numbers. They're warning signs of something much bigger brewing beneath the surface. The economy might look stable on paper, but a deeper look reveals cracks forming fast. Australia has always been seen as the lucky country, blessed with natural resources, strong trade, and a high quality of life. But right now, a perfect storm is forming, one built from global tensions, skyrocketing living costs, and dangerous levels of debt. And most people don't even see it coming. The media whispers about inflation and housing prices, but the real story is far more alarming. In this video, we're going to reveal 10 chilling reasons why Australia may be heading straight for its worst economic crisis in decades. And the proof behind it will shock you. Stick around, because by the end, you'll understand why the next few years could change everything. Number 10. Declining global demand for natural resources. For decades, Australia's economy has thrived on its rich natural resources. Iron ore, coal, and gas have been our cash cows, fueling both our exports and government revenues. But now, the demand for these resources is beginning to slow down dramatically, especially from our biggest customer, China. As China shifts its focus toward green energy, domestic production, and economic tightening, its appetite for Australian raw materials is decreasing. This shift might seem like a normal part of global trends, but for Australia, it's a ticking time bomb. Mining contributes nearly 11% of Australia's GDP and accounts for over 70% of our export earnings. A drop in demand doesn't just hurt big companies. It ripples across entire regions, putting thousands of jobs at risk in mining towns like Kalgoorlie, Broken Hill, and Maramba. Local economies that rely almost entirely on resource extraction are now struggling to stay afloat. Worse still, new trade relationships forming between countries like Brazil, India, and China could mean Australia is slowly being pushed out of the global resource game. With other suppliers offering cheaper or more politically neutral alternatives, our dominance is being quietly eroded. And yet, many Australians remain unaware of how deeply exposed we are. If the world no longer needs as much of what we dig out of the ground, what happens next for our economy? That's the kind of question that doesn't make the news, but it's one we have to start asking. Number 9. Skyrocketing household debt. Australia isn't just one of the most beautiful places to live, it's also one of the most expensive. And to keep up with the rising cost of living, many Australians have turned to one solution: debt. But here's the shocking part. Australian households now carry more debt than almost any other country in the world, with a debt-to-income ratio of over 180%. That means for every $1 earned, the average household owes nearly $2. Most of this debt comes from mortgages, as families stretch their finances to buy into the inflated housing market. But when interest rates rise, and they have, sharply, it doesn't just mean higher monthly repayments. It means less money for everything else. Food, utilities, school fees, even emergencies. Australians are now dipping into savings, cutting spending, and delaying major life decisions just to keep their heads above water. This isn't just a personal problem, it's an economic powder keg. When millions of people are over-leveraged, even a small shock, like a job loss or medical bill, can lead to widespread defaults. And if enough households buckle, it could trigger a chain reaction through the banking system and broader economy. The Reserve Bank may try to walk a fine line with interest rates, but the truth is clear. Australia is carrying a massive burden that could crush financial stability if not handled carefully. The signs are all around us, yet most people don't realize just how close we are to the edge. Number 8. Worsening wage stagnation. For many Australians, payday feels the same year after year, except everything else keeps getting more expensive. While prices for groceries, rent, fuel, and services have surged, wages have barely moved in over a decade. In fact, real wage growth, when adjusted for inflation, has been negative, meaning people are technically earning less than they did years ago in terms of purchasing power. This phenomenon, known as wage stagnation, isn't just frustrating, it's dangerous for the economy. When people can't keep up with rising costs, they stop spending. And when consumer spending slows, businesses suffer, investments dry up, and job creation stalls. It's a vicious cycle that feeds itself. Australia's productivity has risen, but the benefits haven't been shared equally. Corporations post record profits, while many workers face casual contracts, zero job security, and no pay raises. The middle class, once the backbone of the economy, is slowly being squeezed out. Families are cutting back on essentials, skipping holidays, and delaying major purchases. What's worse is the growing wealth gap. While the top tier thrives, most workers are stuck in survival mode. This kind of imbalance leads to social unrest, declining mental health, and a deep loss of trust in the system. It's not just about feeling broke, it's about feeling powerless. If nothing changes, we're heading toward a society where working hard doesn't mean moving forward. And when ambition dies, economies don't just slow down, they collapse from the inside. Number 7. Housing bubble risk. Australia's housing market has long been called one of the most overvalued in the world. And for good reason. Over the past 2 decades, house prices in major cities like Sydney and Melbourne have skyrocketed, with median prices now hovering well above $1 million. For many, owning a home has gone from being an Australian dream to an impossible fantasy. But here's the real concern. This massive surge in property values isn't driven by stable wage growth or genuine demand. It's been fueled by low interest rates, investor speculation, and easy credit. That's a recipe for a classic housing bubble. And like all bubbles, it can't expand forever. When interest rates rise, as they have recently, mortgage repayments soar, buyer confidence plummets, and prices start to crack. In fact, we're already seeing the early signs. Some suburbs are experiencing price drops of 10% or more, and mortgage defaults are quietly increasing. Many homeowners, especially those who bought at the peak, are now trapped in negative equity, owing more than their home is worth. If enough of them default or sell at a loss, it could crash the housing market, bringing banks and investors down with it. And this isn't just about the rich losing investment properties. A full-scale housing correction could wipe out billions in household wealth, damage superannuation funds, and freeze lending across the economy. If housing falls, everything else goes down with it. Number 6. Youth unemployment crisis. Australia's young people are facing a silent crisis, one that doesn't always make headlines, but could shape the future of the entire economy. Right now, youth unemployment and underemployment are at alarming levels, with many graduates unable to find full-time, stable jobs even after years of higher education. In fact, over 1 in 4 Australians aged 15 to 24 are either unemployed or not getting enough hours to make ends meet. It's not because they're lazy or unskilled. The truth is, many of today's jobs are casual, contract-based, or part-time, offering little security and no clear path to long-term financial independence. Add in rising education costs, stagnant wages, and skyrocketing rents, and you get an entire generation that's locked out of traditional markers of success, like home ownership, savings, and career progression. This isn't just a social problem, it's an economic ticking time bomb. Young workers are supposed to fuel growth, innovation, and spending. But if they're stuck in survival mode, how can they contribute meaningfully to the economy? Instead of building wealth, they're accumulating debt, delaying families, and relying on government support just to get by. Even worse, the longer a young person remains underemployed, the harder it becomes to build a meaningful career. This leads to long-term skills mismatches, reduced productivity, and a permanent loss of human capital. Australia can't afford to lose its next generation of workers, but unless something changes soon, that's exactly what's happening. Number 5. Diminishing small business confidence. Small businesses are the heartbeat of Australia's economy, employing nearly half of the private workforce and contributing over $400 billion annually. But right now, that heartbeat is growing faint. Across the country, small business owners are reporting record low confidence levels, driven by a storm of rising costs, supply chain disruptions, and falling consumer demand. Inflation has pushed up the price of everything, from ingredients to electricity, while customers are spending less, tightening their wallets just to get through the month. For a small cafe, a retail shop, or a tradesman, that means slim margins, no buffer, and a constant fight to survive. Many are now working longer hours for less return, dipping into personal savings just to pay staff or rent. Government support has faded since the pandemic, and most relief packages miss the mark for micro and regional businesses. Without a steady cash flow or financial breathing room, these businesses are being squeezed out by larger chains and online giants. Every closure isn't just a personal tragedy, it's a blow to the local economy, cutting off community jobs, reducing services, and creating empty shopfronts on main streets across the country. If this trend continues, we could lose an entire generation of entrepreneurs, leaving our economy less diverse, less innovative, and more vulnerable to external shocks. And once small business confidence disappears, it's very hard to rebuild. If this video opened your eyes, let us know in the comments. Which reason hit hardest for you? And what worries you most about Australia's future? We put a ton of work into making these videos for you, so please subscribe to our channel. It's just one click, but it means the world to us. Number 4. Immigration policy uncertainty. Australia has long depended on immigration not just for cultural diversity, but as a vital engine for economic growth. Migrants boost our workforce, fill skills shortages, drive demand in housing and education, and help balance our aging population. But in recent years, Australia's immigration policy has become a rollercoaster of confusion, marked by sudden changes, inconsistent targets, and mixed political messages. During the pandemic, borders slammed shut. Skilled migrants, international students, and temporary workers vanished, leaving huge gaps in industries like healthcare, hospitality, and construction. When borders reopened, Australia expected a flood of newcomers, but delays in visa processing, unclear rules, and rising costs created a system that's still struggling to recover. Uncertainty in migration affects much more than just population numbers. It throws off housing demand forecasts, pressures the rental market, impacts university revenues, and disrupts long-term business planning. Universities, for example, rely heavily on international students, many of whom are now looking elsewhere due to Australia's high costs and unstable policies. What's worse, the debate around immigration has become more polarized, making it harder to craft stable, long-term strategies. Businesses don't know whether to hire, expand, or wait. Cities don't know how fast they'll grow or shrink. And the economy is left in limbo. If Australia can't regain control and clarity over its immigration strategy, it risks losing the very momentum that's kept it ahead of global economic downturns in the past. Number 3. Aging population pressure. Australia is getting older, and fast. Right now, more than 1 in 6 Australians are aged 65 or over. And that number is expected to rise sharply in the next decade. While longer life expectancy is a sign of progress, it also creates a massive economic challenge. An aging population means more people retiring and fewer people working, a demographic shift that puts serious pressure on government budgets and social systems. As retirees draw more from pensions and public healthcare, the cost of aged care and medical support is skyrocketing. At the same time, The younger, working-age population, the tax base that funds these services, is shrinking as a percentage of the whole. This imbalance leads to either higher taxes, bigger deficits, or cutbacks in public services, none of which are popular or sustainable. Compounding the issue is the fact that many retirees haven't saved enough to support themselves. Superannuation gaps, rising costs of living, and longevity risk mean more people are relying heavily on government assistance. Meanwhile, younger Australians are already dealing with housing stress, wage stagnation, and job insecurity, making it harder to carry the economic weight of the growing older generation. If we don't address this now, we risk entering a cycle where the economy slows, public debt climbs, and generational tensions deepen. The age imbalance isn't just a future problem, it's already here, and it's quietly becoming one of Australia's most serious long-term threats. Number 2, interest rate shock. If there's one word that sends a chill down the spine of every Australian homeowner right now, it's this: interest rates. Over the past 2 years, the Reserve Bank of Australia, RBA, has aggressively hiked rates in a desperate attempt to tame inflation. But in doing so, it has unleashed an interest rate shock that's rippling through every corner of the economy. For many, mortgage repayments have doubled, sometimes tripled, practically overnight. Households that were just managing are now finding themselves in mortgage stress, struggling to keep up with higher repayments while prices for essentials continue to climb. It's estimated that over 1.4 million households are already feeling the pinch, and that number is rising fast. But this isn't just about homeowners. Rising rates hit businesses too, especially small ones reliant on credit. Investment slows, hiring freezes, and expansion plans are shelved. Even renters feel the squeeze as landlords pass on higher loan costs through skyrocketing rents. What makes this shock especially dangerous is how fast it hit. After years of ultra-low interest rates, many people built their financial lives around cheap borrowing. Now, with rates climbing faster than anyone expected, they've been left exposed and unprepared. If the RBA continues on this path, or if the damage is already done, we could see a wave of defaults, foreclosures, and economic contraction. It's a harsh reminder that in a debt-heavy economy like Australia's, interest rates aren't just numbers. They're the difference between stability and collapse. Number 1, China-Australia trade tensions. Here it is, the most serious and potentially devastating factor: Australia's strained relationship with China, our largest trading partner. For years, Australia's economy has leaned heavily on exports to China, especially iron ore, coal, wine, beef, and education services. In 2023 alone, China accounted for nearly 30% of all Australian exports. But beneath the surface, this partnership has become increasingly fragile. Tensions began rising due to political disagreements, security concerns, and Australia's calls for investigations into the origins of COVID-19. China responded with a series of harsh trade sanctions, cutting off or limiting key Australian goods almost overnight. Billions in export revenue vanished. Industries were thrown into chaos. And although some bans have since been lifted, the message was clear. Australia is too dependent on one partner, and that partner is no longer reliable. This is about more than just lost revenue. China's ability to turn the economic tap on or off gives it huge leverage, making Australia vulnerable to politically motivated economic attacks. Meanwhile, efforts to diversify trade haven't kept pace. Countries like India and Indonesia are growing markets, but they're not replacements for China, at least not yet. If tensions escalate again, Australia could face sweeping losses across multiple industries, a stock market downturn, and a severe hit to investor confidence. It's a stark reminder. When you rely too heavily on a single trading partner, you don't just trade goods, you trade economic security. So there you have it, 10 powerful and alarming reasons why Australia could be standing at the edge of its worst economic crisis in decades. From the silent struggles of young job seekers to the thundering impact of global trade tensions, every piece of this puzzle paints a disturbing picture of what lies ahead. And the scariest part? Most of these problems are already unfolding. Not in the distant future, but right now. This isn't fear-mongering, it's a wake-up call. These challenges don't just affect economists or politicians. They hit everyday Australians. Families trying to buy homes, small business owners fighting to survive, retirees watching their savings shrink, young people searching for a future they were promised but can't find. But here's the good news. Awareness is the first step to action. By understanding these issues, we can start preparing, pushing for better policies, and protecting our financial futures before the storm truly hits. If this video made you think, don't stop here. Hit that like button, subscribe to the channel, and share this video with someone who needs to see what's coming. Let's start the conversation now before it's too late.